So we were actually at 3.06. This is a terminal level because we seem to have broken out. This is only now a support translation zone. We bounced out of it strongly. We're not going there anymore. So our support has become 3.06. Oh, 50% at 3. Translation levels. But we'll stick with the 3006. It has proven very resilient so far. And we'll find a correction into that structure, like I'm saying, not exceed 50%. It's best to enter at 76.2 or 61.8. So let's take a look at that at trade management. Alright, so this is what we were saying on trade management earlier. Like I said, this level here, 306, is of vital importance because it is the neckline. You will not bounce below the neckline much. You only spike below the neckline if we make that spike. Alright, and only 50% between the two levels, between the two neckline levels, then we would see that. Alright, so the market did correct up to 20.22. And there was a tweezer candle. This means a negative candle and a positive candle at 3.1260 exactly. Alright, that was where we were trying to enter, and we didn't catch that. The market didn't fill us because we were 3.12 and the market did 3.1250. Okay, no problem, no doubts. Okay, there will be no problem. We expect, of course, that the correction will continue until we bounce off that 200 point moving average. Either way, because we have cycle translation here, see that we have come to 314.45. So we would want that dip. We would want that dip to go down. It has potential to see 310 and even 309, but I would only 310. We will be bound at that point. And at 310, we would want to fill 313, allowing the focus spread and even maybe 310. Will not be an exact figure. Okay, so fill 313. Our stop is of course 306. We could wish to take that to 304. Given what I've been just saying, that 306 is just below the translation level, just below the cycle translation level. Remember, now we are doing the 314 somewhere here. We would want to take that to 344, okay, right below this. Alright, right below the support line. Right, so now we would want to hit 313. Okay, that's this yellow arrow here. Our stop is 306. Right below these supports. You do your discretion. 306 is going to be even below 1. So that should be okay, I guess. You see it. The cycle support would have given way. This level of translation would have been done away with, even on a spike, and we would not be out. The analysis would not be correct. So we stick with the 306 as a stop. Okay, and then we are moving inside this advancing uptrending channel. Our first target, of course, would be 303.24. This here is 3.25. Have a rejection to say 318, and we will do another position all the way to 378. And we take on longs or proceed with longs as the market moves inside that channel. Okay, so to recap, any let's see on the 15-minute chart, it is just being envisioned now. Okay, that's it. That's the kind of correction we will buy then. It doesn't matter what we will come to 214, but we will not. The fact that commodities are softening in price will not deter our determination from going in at 314. Okay, sorry, at 313. I'm sorry. Alright, at our level of entry, which is 330. recap, we're doing to entry 313, our stop at 306, our target 320. Okay, these are the levels shown here. We're buying the put between 315. This is the fluctuation high for the week. Okay, our target is the breakout high for the counting. Our stop at 304. I guess it is 50% above the market. Alright, we move on now to other issues, which will be the measures, currency FX issues. Currency clear. And our first of these is the euro dollar. If you have any questions, please move along to the moderator. Alright. So, if you have any questions or wish to have any issues to be done, please notify the moderator and we will take note of that so that when we take the end of the analysis. So I think my end here, I don't see any questions coming in. So we move along to euro dollar. Okay, we're long this of course, and we seem to have filled at least 2/3 of our position. Okay, so what we are seeing is, to remind ourselves, correction A has finished, and we're currently doing correction B higher. This correction B is going to be three-legged, and A, this yellow A, and then there's going to be B, which is an A, B, C, which ends here. And then we're going to see the C, this yellow C, okay? And that will terminate correction B. Our upper level or higher wave C, higher wave B. Okay, so it was vital for us to enter correction B here. That was projected and is still projected at 117.70, 117.90, and 117.10. 118.10, I'm sorry. Alright, 118.10 to remind ourselves of the fundamentals, because I think now. So we are correcting the degree 3 advance. That was an A. Alright, and now we're currently doing ED, which will take us somewhere here. Maybe we'll put that in this chart next week. And then we'll be doing the C. There should be something of a triangle below that neckline. Okay, so termination point A is shown in red on the coming chart, and B is the one that we are uptrending to. So that is A here, which we just saw here on our weekly chart. Here, that's for A. There's going to be a full B here now, which we should be trading high. This B in red, this is full B. So we would think this full B is going to be a three-wave move. First wave is A in yellow, then now we're doing B in yellow. That is a A in B, that's a B in B, and that is a C in B. So C in B still concluding on the market. Would want to buy into that to take profit in finally leg C. Alright, right up here, this yellow C concludes higher wave B. Alright. So the fibs here of this uptrending move were 1.1770, 1.1790, and 1.1810. Yesterday we filled 11790 and we filled 117. We didn't fill, oh yes, we filled 11790. Okay, we filled 11790 and 11810. We didn't fill, of course, 11770. Alright. We have now positive momentum on the 15 minutes. This is a 15-minute chart. This still could be another leg in C, correct? Vision there. And C itself is an A, B, C. It is impossible. And this being the Friday, we could wait, we could want to hold on to our entries, alright, and enter these specific levels, still fill 117.70. If you're 118.90 and 118.10. Alright, so we're going to hold these until next week. If you haven't yet filled them, you could consider to fill them on the current down correction or retraction in prices. So it's going to be a retraction to see these levels even lower, a bit lower. Let me see. So you may wish to consider again filling, if you have not already done so, filling 1770, 1780, and 1770, 1790, 1.1810. Alright, our stop is 116.80. That's that point here. That is 150. That is right below the most structure. Alright, and our target is 119.90. If you're going across the weekend, carrying the position, you may wish to litamize, break down your list. Added 117.90 and 118.10. You may take off 117.70 off the station and bring down your risk to below 1802, below that point here, 160. Okay. Otherwise, the entries are valid. We still going along at 117.70. Alright, right about here, 119.36, and we have 20.60. Okay, so there is a strong rejection at 118.65, understandably, because this is the breakout high for the country. This is the 118, sorry, 65, 118.65. We still expect rejection the second time, which is currently going on in the market. That was one. So we rejected him twice or three times. This could be the final leg down. We should utilize that and long into it as planned. This could be what you are seeing. I don't think of course will go that low. But this is just to show that we could consider that we are seeing the bullish formation. Sample that and then reverse higher to take out the line. Okay, so to recap, we would still remain long 117.70, 117.90, 118.10. Our stop is 116.80. Oh, slightly lower. You could go to 116.50 because you're approaching the weekend below that support minimum support zone. And our target, preliminary target is 1. Okay, so at 119.90, this is where it takes us right about here, and we would want to go out at 120, 119.90 because we expect the consolidation below the next line. Okay, then we would re-enter long, compile a sizable long position because we believe we have a bullish trigger on momentum right here. The last time that happened was below that next line, and we go right above that next way to that level. So that resisted then here at maximum momentum, and now we have the same momentum signal at the level at which momentum has resistance, which means that when we take out that level, we hope or expect that this will become cycle cancellation supporting level, meaning that once we finish 4C, we go higher into a new trending wave 5 as to this level will now act as our new support. Okay, so the both would be of importance to us. We move on to the next issue, which is the Euro Yen. We already did that, so we go straight on to the United States dollars against the Japanese yen. We were along that, of course, since early last week, I guess, and this is what we're seeing. This is our trade management chart. We expect to bring to be doing degree 4 and this wave 5 here. We've done an A, we've done a B, and we are going to be doing a C to test for course 105, I guess, because 105 is the neckline here, right, of that advanced wave. We have broken out for that neckline, and we don't, it could spike a bit above it, so we could be doing 105.10, but I doubt that we'll be going further than that. Okay, so why would we not be going further than that? Of course, we've treated that chart fundamentally several times. We'll just take that and go to the technical picture and the trade management chart. So that is the technical picture. That is what we're waiting for, what we are considering a valid technical picture for the current market action. It shows this is a 4-hour chart, and it shows that the correction currently going on in United States dollar against the yen, bearish trend right before the United States presidential election. Okay, so that trend, that correction has been contained inside an ascending triangle. That was an ascending triangle. We had the leg A and the leg B, alright, and leg C broke out of that triangle. We believe it broke out of that triangle because even though we bounced at this point of the triangle, currently correcting that bounce on momentum, this is what we are seeing. This is extreme momentum cycle or signal, and through that kind of signal we get a zigzag, or what we would call a massive wave 3 spike down. We have the same signal here now, so expect that to break, okay, to break that trend line and move all the way. Our projections for C take us to 101, probably 0.2, or about that level. Alright, so we'll go to 102 all the way down to 101.5 and 101. These are these levels shown here. 101. Okay, so the importance is that this signal coincides with the coming US election. So we would expect that work out, and we believe that the election, we would, it's not a matter of what we believe, but we have to take into consideration, sorry to switch charts so quickly, we have to take into consideration that the election, whatever the outcome is, will not be a smooth election. It could be a contested election, and if it is a contested election, then it will impact the equity market and it will impact the US dollar. And okay, so the last time that broke over, that is the pennant formation here, that here, and this is a smaller one here, which is a fraction of that larger one. The last time the larger one blew over, it took us, yes, we will, there is a quest to repeat gold, silver, we will repeat it at that later. Excuse me. So the next time we broke out of that pennant, we went all the way down to 75. Okay, so if this time coming around with the US election, if there is a contested result between Trump and Biden, then it will be a lengthy process. It will grow longer in time. It could, of course. And in that case, that would bear on the US dollar. And as a matter of fact, gold was supposed to be going up because investors were pulling out US before the election. Alright, so gold now is going down. Maybe we change our mind. Maybe there's some other fundamental going on. We're still about to find out. But if there's problems with the equity market, usually what happens is the Federal Reserve interferes very strongly, creating swap lines to investment banks. Swap lines meaning that investment banks can draw any money they want to buy any amount of equities or bond they want on your orders. Alright, on an overnight basis. They will hold these until next day, until they know what to do with them. If the market is still going down, they will hold on to another day, and another day, and another day. And then return them back, sell them back into the market when the time is appropriate. And they will only pay interest on an overnight basis. Okay, so when the central bank does this, of course it will print a lot of dollars, give it to these investment banks, and that brings the value. Alright. That time, back in 2008, it went way down against the Japanese yen because of the credit crash, and people had been borrowing money in yen, alright, to make dollar purchases because the interests on the dollar were high and it was zero on the yen. So at the time of the credit crash, interest on the dollar went to zero overnight. Yen soared in price against the dollar, and everyone was very fast in order to pay back the debt in yen. Alright? And this caused an equity crash. And then the Federal Reserve, of course, interfered and bought the equities that were being dumped. So if we have another equity crash related to a second or third corona breakout and mishaps in the US elections, and people start dumping equities, the Federal Reserve will interfere again, to be sure about it. Alright, even on election night we have like a mixed result, and there's a lot of speculation, and some Trump-ites come out saying that they will not accept this result, then you can start seeing this scenario happen. Okay? So the problems with the equity market, central bank will interfere, the dollar will be down. Okay, so we would want to sell, like we're saying, that level here. Daily chart, this is that part here. Alright, focused on here, we have a head and shoulder formation. We already broke below the neckline of that head and shoulder formation, and we did a smaller head and shoulder formation below that. And we already did that with the smaller headed HSS, smaller headed formation below the larger headed formation, where we attempted to test the neckline of the larger headed formation and failed. And now we have also failed at the neckline of the smaller head and neck formation, like 104 is here, and we already did 104.50. So we're testing now that part. So now 104.80, I guess. 104.83. Okay, so the market is already discounting this very strongly and is on its way to 1. We want to hold on to our positions for 105.60 and add to them. Okay, because the first level that we're seeing on election night, if things don't go smooth, will be 101. So we're going to enter that night with a lot of buffer under our belts, meaning that we are already carrying profits. Okay, so if the market turns against us, we can afford, we're carrying a strong hand, we can afford to hold on to sell to our sales until a clear result for the election unfolds. Okay, so if both fundamentals work out, if there is a corona spike in numbers, and if there's election volatility, negative for the dollar, like has been explained, then we're going to see 101. That was the last time we saw that, was on the first corona pandemic. And if we have both fundamentals enacting again, then our level is 101. Okay, so we would want on trade management now. That's that. This is our trade management chart, and this is the current correction we're seeing. This is the current market action. Alright, we did do, I guess, 104.4 on 433 exactly. Alright. Leg 3 and 5, we're still about to see leg 5 and 5, and we should sell 105.05, 104.9, 104.8. Okay, so we filled, I guess, 104.8 and 104.9, but we didn't fill 104.10 or 105.10 or 105.5. These are these levels here. We would want to sell 105.10, 104.9, and 104.8. I believe we filled 104.8 and 104.9 yesterday. 105.10 was not filled. That would average 104.95. Alright, our stop still remains at 105.5. That's our stop here, 105.5, right above the right shoulder. This is 105.8. Alright, that is our stop. Our target for day traders was 103.95. But of course, to make this interesting, I would consider, we already showed it previously, 105.9 and 105.5 and 105.6, I guess. So if we add our holding on to our shorts and add the newer shorts, we are already holding half the contract, averaging 105. Managed to short these, another hand contract at 104.95. We are averaging the full size contract going into election night at 105.23. Okay, so if our stop is 106.2, this is $1,000 risk for 10% of the standard dollar account. If you go to 97, if you go to 101, your profits are half. Instead of $8,000, you get $4,000. You go to 97, make $10,000 on that trade, almost. And 97, I believe, is that issue here. So is that zone here? 97. Almost the short. That's it. Okay, so it is your first target once you break out of the pendulum. Should be attainable on election volatility, of course. That's replacing the data. Alright. Okay, so nobody knows, you cannot be sure, no one can be sure that this is going to happen, but the key to success is being prepared, really. Prepared for all scenarios. And this is one of the scenarios, okay? So this may not happen, but it may happen. You have to be prepared for it, and this is how to be prepared for it. Alright? If another scenario, happens, you would have to be prepared for that. Both scenarios do not have to clash. If you're going to the other scenario, of course, goes for the fact that, well, there's going to be a bounce out of that level, and we're going to go to it 125. We'll put our stops at entry if you find higher volatility, and we're at 105. We'll close that break even with 0, and then we know that we'll reverse at 107. This is our next scenario for 118 and 114 and whatever. So we would have to be prepared for what scenario. In that other scenario, of course, we would not have a profit buffer to rely on. So we also need to keep in mind that we would favor, or we would try to implement the scenario that is favorable to us. Okay, so that's it for dollar yen. We move on to our next issue, and that would be the Swiss dollar. Dollar yen, 105.10, that's that level here. We expect 5-4, that's that moving average, 200-point moving average at 105.14 counter. You have, of course, an A and a C, and you can easily, if you pardon my doing so, easily to your C. So you know exactly where this is going to end. If you're interested in short, just joining into the position, then you will know that you're expecting to see that correction. Technically speaking, that is carry on to 105.17, 105.8, 105.31. Okay, so you can split your position between 138.2% and 161.8%. So it's 15 and 105.25, and your stop is 105.8. Right, so it's very minimal risk, something like 60 to 70 points at most. And you're going for election night 97. So 97. Okay, so if you you manage now, this is, I believe, is your final chance to enter this market short. Very difficult prospect. If you enter now, you stop at 5.8, it is 70 points up to 105.10. Okay, very minimal risk, and you're going for 97. So you can go straight short inside. Okay, so our next issue is the United States dollar against the Swiss franc. It is pretty much the same scenario here. To recap on the fundamentals, of course, we remember that there was this higher degree cycle broke lower below the cycle support. We expected a reversal below the cycle support, and we had an inverted head and shoulder pattern to go with it. We should have reversed and supported above the cycle support. But now, apparently, the market is discounting volatility in the US election. So there was rejection of the cycle support, and at the bottom of week 1, we have a dual confirmation of a bearish trend breakout. Cycle support acted as resistance, and the bottom of week 1 acted as resistance, so that is week 4, and we're down in week 5. 88 or 0.87. Okay, so we have now a head, and we're doing the double shoulder position above that neckline, which we should sell. So that double shoulder position that we're talking about will take us all the way up to 0.92. That level here, 0.91. Okay, and as we are already short in the United States dollar against the yen, we are not forced to take lower short entries in the United States dollar against the Swiss franc. Alright, until we see 91.50, okay, and 91.60, I would not go short, okay, because I believe this is lingering higher until we do this neckline. With 5 here, like we've been saying all along, has ended here now. And we're doing an ABC correction. We just have to wait idly at 91.70, 91.60. Okay, so this is our trade management chart here. You'll find that we have circled 91.50, very important level for us. This is what is shown here. We're showing 91.50, but start taking small shorts at 91. Okay, was testing levels just in case things go faster than expected. But we're going for 91.50 and 91.60 and 91.70. We stay there, right? We stay short, ready there. Limit short, orders ready. Orders ready. And our stop of course is 92.50, so it's just a matter of 100 points between 91.50 and 92.50. Our first target will be 59, but on election night we'll go to 88 and 87. Alright, okay, so take a look, finally look at that chart. Like I'm saying, we expect to see the second shoulder mature at 91.80. Okay, so observe closely, alright, and shorten to that left, so closer to that right shoulder. It will take time, but we have to stand ready. Alright, okay, so we'll move on to the next issue. Sterling dollar. We'll take a few questions first. There's a question regarding, is any commodity worth buying? Well, the commodities now are worth selling. Okay, you could consider you want to sell gold. Okay, so the only commodities that you could consider worth buying are the copper and nickel. And I believe people working on copper and nickel have to be directly associated with the commodity. Personally, I don't buy them. I think someone on the board buys them or is interested in them, and maybe that would have to do with some kind of business they may be running or some kind of experience they have with that commodity. So currently commodities worth buying are copper and nickel. All other commodities are worth selling, gold, silver and oil. They are posting sales. Alright, we already showed these and we will delve again or redo silver shortly. Worth selling, of course, and entering is the position in the dollar against the United States yen. Oh, sorry, I'm very sorry. The position against the United States dollar against the Japanese yen. Important, I think, to engage in with the election night coming up. Okay, so let's move on to our next issue, which is sterling dollar. Alright, we were trying to long 130. I believe what is currently doing 130.14, so maybe okay, so this is our trade management picture. To remind ourselves, we broke higher yesterday, not yesterday, probably the day before. We have now a signal that we had a signal that the wave 3 broke out. Alright, that is that wave here. And we were going to went to retraction to that wave 3, and we had presumably posted entry decline to go high until 30 weekly or 30 70, whatever that was. We would want to long at 30 50, 30 30, and 29 90, I believe, or 29 50. That's it. 30 30, 130, and 1.2985. These were our long levels. Alright, so let's see how these did. Well, we did enter now, I believe, we did 1.30, and we could still see we're doing now the final leg of the correction, and we expect it to terminate here at 1.2978, above of course 1.2978. This being the Friday, we can do nothing but hold on to our positions, okay, with this kind of stop in place at 120 or 129 or 129, right below the motor move. Okay, so why are we so fundamentally strong this? Because we are acting on this cycle translation line. That's it, the cycle translation line being confirmed. Again, like wise we said before, price rejected on our high momentum rejected, could not take out that cycle translation zone, and momentum reversed here to support above that cycle translation line, and there is an inverted head and position pattern, sorry, on the 4-hour frame. So definitely we're going higher, and we want to hold to these positions by 2-10 minutes. Okay, our next target is going to be 32.30, if not 34, and this is what's shown here. That's it, 33, and of course before that that's 32.70, 32.80, and 33. We are doing of course the higher V. And we have a positive momentum spike that confirms us that this is a breakout. It could be, of course, negated on bearish, anything bearish coming out regarding breakdown. But the general belief now is that as time dwindles down, they are going to reach a deal, because the British government does not want to have two problems on its hands, Corona and Brexit at the same time. Like if you're going to have a Corona pandemic, you must have and open borders, okay, for these supplies and medical aid and stuff, and you cannot put border posts and custom posts at the wrong time, okay, in the wrong place, of course, and this means they will have to postpone Brexit or find a breakthrough agreement before the year ends. And I think the market is discounting that, and this will kick sterling down. Okay, so we would 130.30, that should have already filled or about filling now. We have now 130.37, and you could also contemplate to add 1 129.85, and between 130.30 and 129.85 when seen, and hold on to these two next week. Our stop is 129. As advised, our target is 133.50 for intraday traders, 134.50 for swing traders. That's it. 133.50 is the 50% between the breakout high for the current month, which is about 134.50. Okay. And I think we didn't do 131.15, we did 138. Okay. So we do 131.15, I believe these are the levels that we're projected to get out. Alright, so quick reminder, if we bounce correctly, we are currently bouncing long-term wise, so quick to remind ourselves. We're bouncing at 129, we already did, we're now bouncing at 130, we're bouncing out of that neckline, a positive momentum signal here. The round I believe we're going to use is 135, which is now we're targeting 133.50 and 134.50 and 132.70. So it's our intention to keep trading that, alright, on successive legs of 100 and 120 pips as we go higher on an intraday basis, because this is going to be choppy and we want the volatility waiting for us, not against us, so we don't want to hold too long. We just buy the low side on short-term momentum, alright, and take profit 100 or 120 points from this entry level. Okay, so our next issue is the United States, the sterling yen. Alright, okay, so we expect a correction there, and we are bearish that since yesterday. To recap on the technical picture. Alright, so we have been seeing a head and shoulder position on the 4 hour. However, we are not that bearish. We do not believe it to break the neckline. We're still in indication analysis to determine if the ratios are correct and this will go higher, but the general belief so far, my take on it, is that it will go higher with certain. Okay? So the current correction, we believe that we have finished the 5-wave structure shown here. It's very choppy, so it goes with some doubts. But assuming it is a correct structure, then what we're seeing is simply an ending diagonal here that will test again slightly above the neckline. The lower boundary, this is the lower boundary of that uptrending channel. This is the confirmed uptrending channel with an Elliott structure 1, 3, 5. So the last time that happened, we bounced at the lower boundary of the channel, and that was the result. Very lucrative. So this time around, I believe we're going to bounce here again, and that will be again the result, given that we could not break below that neckline. Earlier we were short these levels here, okay, and we believe that we will go down to the rate of the neckline, but it didn't materialize, and this means that the issue is bullish so far. That's our perception of it. So we could want to sell. Yesterday and today will be here. We do understand that since 5 has terminated, we have an A, B, C correct. So B, this yellow B has come down here to mark the second right shoulder. We now have the final correction in C that should bounce at the top of 1. That's our big comment. The top of 1 is 134.60. So we're safe to be long at 135. Alright? With a stop, of course, below the 0.5. However, current market entries would have to be short, naturally. And we are saying a 1, 2, 3, 4, 5 wave structure. This is a complete Elliott move down. Alright, and that was the correction. Okay, so if that was A and that was correction B, we're still going to see C down. that we're talking about, and it was bounced at the top of one here, 134.63. We of course say for the long higher at 135. Currently, we would want to sell 137 and above. Our stop is 1. That was yesterday's position, and that should have filled. Okay, and our target is 135. Okay, so we're selling right below 1 here. There is around 245, so it's right below 1 here. Alright, and you're going for 135, right above the top of 1 here, and the stop is right above this resistance level here at 1. That is 139 here, so that is around 138.6. Let's take a look at the market action. So this is the 1, 2, 3, 4, 5 that we're talking about, and that was the correction terminated here at this point. It's very important for us to enter shorts at, if you draw a line here, then that should be your downtrending market structure. It's very clear that's the 1, 2, 3, 4, 5, and what you need to do for today and next week is simply this. And drag it lower as you move lower. Currently, you could expect a correction to 50% at 137. So you can still enter 137. To 50% here is 137.07. 137. Reasonably available. And your stop, of course, will be right outside that market weight. 137.70. You would probably take that 138. To have a 100-point stop, and you're going to 135 as a price. You could of course see 137.20, but it's really safe to say that you will see 137. Okay, so you would short, if you wanted to join the market now, you could still short 137, your stop is 135. At 135, of course, we would do this. Okay, with long here. These are these arrows long here. Alright. 135 and all the way down to 134.70. You have potential to see that. You know, this is 134.63. This being the correction, it could go all the way down to the bottom of 2 here. Alright? And so we would have to take a large, or place a large stop at, or again, hold, protect the position all the way down to 133.10, which gives us about a 200-point stop, assuming that if we long 135.5 and 134.7, we'll be averaging 135.10. So at 133%, 10, this is 200 points, about 6% if you can 3 minutes at minus $600. However, the target is 140 and 150 possibly. So you're doing at least a 1 to 2 risk reward, if not more. You probably will take that all the way to 1 to 2 risk reward. You would want to leave in that position. Okay, so it's worth entering at least, I think. That's my take on it. Of course, we do these elements. Okay, we would want to consider to take in enter 135.5 all the way down to 135, all the way down to 134.7. That's long, probably next week, late next week. With a stop at 133.10 and target at 139. Alright, so that brings us to the end of our analysis. We could now take questions. With that question regarding gold. Sorry, silver, I'm sorry, not gold. We hit that right on the head. Okay. So this is what we're looking at, is silver. Alright, so that has now started moving. Let's take a look at the analysis first. We have reverse bias. We were long, of course, gold. Alright, but since we were long gold and silver. Alright, but as gold wasn't making much progress, and we reversed our bias in silver. We have done the same. We reversed our bias in gold. I'm sorry, as we reversed our bias in gold, we have done the same with silver. We have reanalyzed the issue and segregated most of the waves, and are quite confident in the current wave. The Forex here. This is a 4-hour chart, and that was the bullish trend in silver that ended around 30, I believe, $30. Okay, so that was a wave 3 and 3. That's a 4 and 3. That concludes wave 3. Then there was a correction for A, for B, for C, and we actually did a 5 confirmed. Okay, that's it. 1, 2, 3, 4, 5. So this uptrend has completed. We expect to see a protracted downtrend. Alright, and it's like this is a complete cycle, and this trend should take us all the way down to 38.2% of that cycle. Okay, so 38.2% of that cycle leads us to step below, test below that 3-5 here at $21, maybe $20. Alright, so this actually measures to a complete Elliott structure, like in yellow, 2, 3, 4, 5, and 3, 5. And all the while that we have been contemplating that we are doing here an ascending triangle to break above this neckline here, it turns out that we were doing a bear flag. This correction flow was contained by this bear flag, and it did an A, B, and A, B, C, and this 4C has terminated now here. Okay, so this 4C has terminated to the right with 1 red. Okay, this is the main bearish impetus wave, and usually necklines are marked at termination points of wave 1. So we're quite confident that this is the neckline, alright, and that is where we did terminate, and so we can believe that having rejected twice that, the market will not be going higher and breaking that neckline top that we place. Technically speaking, of course, so as traders, it doesn't really matter, it doesn't bother us what kind of counter using. And a stop that is we place, if we're going short above 26, it's very safe and will never get hit. We think so. According to this analysis, this is the most important thing that Stephen said on that chart before. Okay? So we would want to segregate that area and take an entry short with a stop above 126. On the 4-hour, and that is our trending wave down. This is our bearish motive wave, marked in yellow here, 5 swings all the way down to 3-5. Like I said, that was 4C now here, okay? And right here we're seeing a head and shoulder pattern at this trend line. Once this trend line does break on negative momentum, that time that chart was drawn was very weak, okay? I believe we will be doing wave 5, at least the first leg of wave 5 in red here. It will at least take us to test the neckline here at B, alright, and that would be leg 1 of that wave 5. Like, remember, we just said, wave 1's always terminate at neckline, so that wave 5 will terminate at 2350, that point here, okay, or at 23. Okay, that will be 23. 50 or 22. Okay, and then we're still seeing another course of correction, a bounce, I'm sorry, and then we're seeing another leg 3, maybe all the way down to 20. So what is informative to us as traders is we want to enter here into the right shoulders, we stop above the head. If you want to be very safe, you go, like I said, all the way above 26. But it's suffice now for the moment that we are above the head here at C or above with 1. We have 1, 2, 3, 4, 5, so we actually corrected this structure too. Okay, so 2550 is appropriate. We would want to enter the left shoulders here, so the right shoulders, I'm sorry, we'll enter the right shoulders here, which is gives us an entry option at 25 dollars. So we would sell $25, our stop is 25.50, that one here, and our first target is at 3. Okay, so at 23, we picked of course the longer lucrative target on the consideration that once this cycle breaks lower, then this cycle is in effect, and it will take us to that cycle low, which was 2350 and 23. That cycle low. Okay, so to make it a profitable trade or a lucrative trade, we would want to enter short 25. Our stop is 25.50. Our target is 23. This gives you $2 on a half a dollar investment. Okay. All right. Okay. So maybe not be too greedy, and maybe add 23.50. Then we get in 1 to 3 units. 25, and you add 23.50, and this is 21.50. It's 1 to 2 units. Currently, I don't believe you'll be able to make 25 because the market is started to go down quickly. Let's take a look at trade management. That's what we see on trade management. That's 15-minute chart. We haven't had a complete Elliott structure. We expect a correction in an A, B, C, all the way to 25 to contest that left, like we've been saying, 323 or 2350. Okay, so the market is kind of doing 24.47. Let's take down to 15 minutes. If you remember earlier in our analytical session, momentum has been and we consider that it can still wait and get filled at 25. All right. So it's really your take. This being a Friday, you may wish now to sell 50% of that swing. That swing that you see right before it. 50% is roughly 26.40, 24.60. I'm sorry, I always keep mixing the numbers. I guess it. Old timer is beginning to catch on. With me. Anyway. You may wish to take an entry at 24.60. We'll just stop of course at 25.50, spoken of earlier, so that's a $1.90. And go down to 23.50 and 23. Given that, of course, all traders patient, and you would want to get into the trend, and either you just leave that until next week, and if you do that, you may come and find that it has opened lower. And there's also slight consensus that the correction has finished. It is possible, of course, that the correction is still going to prolong, like this is an E, we see that is an A, that's an E, and we're going to do is C all the way up to 25 again. That left short. This is a Friday, of course, you can see that on Monday, so it's really your call. You can wait until Monday and short at 25, or you could take an entry, small size, half size entry at 460, and then add to that on Monday at higher levels if the correction still prolonged until 25 and above 25. I said earlier that it's possible to see a double head. Okay, I believe it's still possible. The market can survive double head, so you could only wish to take half the size position at current levels on the consensus that you will still have chances to have higher. Remember that to be safe, we just consider that we want to stop above 26. So if you see levels all the way to 25.50 and 40 and 25.50, don't be discouraged. You can still see a double top here before going down. Okay? And the market will test everyone. So it's better to go at half ammunition currently and wait to fill higher. And likewise, been said earlier, the most important imperative thing about this point is that we know the market, until the market breaks 26, we're not bullish. So we are very well protected above 26, and above that point, I believe here, but that's a bit too far away. We are protected above to short all the way to 25.40 and 25.50, even on a double top formation. We will not be discouraged. We will short and expect a continuous break of that bearish lower boundary Okay, at 26, if we get to see 26, in effect, this is what we would be seeing. That's it, 26 here. Or the market would still be doing continuation into the bearish chart. Flag, bear flag. All right. Yes, silver is a sell now. This is not what we say. There's a question now whether silver is a sell. Yes, silver is a sell. All right. So if we break about 26, right here, that's 26, then we know that we are wrong. Even though inside, we're still inside the bear flag. But we would go, it's a low probability possibility. Well, I could say that. Okay, so this scenario here, this is a bullish scenario, would have called that we long current levels, 2450, for that 26. Okay, but there is no bullish potential for that. That is a 1 hour chart. Decision making chart. And like you see, we have negative momentum spike, like low momentum, then these bouncing momentum. So we are bearish and it invalidates this analysis here. This is only there on the presumption that the market can still surprise us and turn bullish. So we would want to see positive momentum that happened at the lower boundary of the bear flag at 124.50, which is the current level. And we will go to 126 to contest that neckline here, spoke of earlier, that's a competition. But as this is not happening on strong momentum, it's not even happening on price, we're going down on strong negative momentum. This is we will consider a signal on the 1 hour. Consider taking long, we will only consider taking shorts at 24.60. Okay, I believe this is the level that you could be seeing at this point. We'll just stop at 25.50. That's the level we're talking about. 24.65 or 24.65. And we'll go also from 24.50 to 23.50, that's about the dollar. Okay. With potential to see 22.50 also would give you $1.50 in profit. Okay, so that analysis, you can take more questions. Please post all questions to the moderator or any wishes that you wish reserved, any issues that you wish reviewed. Okay, and we will still make time to do this. There's a question now regarding gold. Is it down or up? Gold will be going down. We just discussed that. You might want to sell 24.60. This is that level shown here. You're selling this. This is silver actually right in front of us. You're selling into the right shoulder of that head and shoulder formation. You're selling that point at 24.60, and you are going, first target is 22.50 and 23. The stop is above the head at 25.50. So to recap that, that's 20. You're selling 24.60 or 25 if you can see that, or 24.70 or any higher level than 24.60. Your stop is 25.50. Your target is 23. Optimum target is 23. So if there will be any questions, please move them on to, and we could still really take time to do that. Remember, of course, that the weekend is right about approaching after the session, so you may not want to engage positions across the weekend, like in silver and gold. Okay, still afford to wait until Monday. However, if you're already holding positions and that are favorable, I will not enlarge my risk on the weekend. Alright, so if there will be no more questions, okay, I think that goes the end of our session. Okay, I wish you all very happy and relaxing weekend with family and friends. Alright, don't forget to renew your energy. We're going to have a very, very busy trading week. Probably the week of the next week. That's this Tuesday. Tuesday is next to that one. So the coming one. So we need to be focused and healthy. Right? So please enjoy a relaxing and happy weekend with friends and family, and we look forward to seeing you all again next week. It's been a pleasure. Take care and happy weekend. Bye.
ਘਰ ਹੀ ਅੱਜ ਕੋਨੋਗੇ
ਅੱਜ ਫੌਕੀ ਦੀ ਹੋ ਗਈ ਸੀ
ਕਿਦੀ
ਫੁੱਕੀ ਜੱਕੀ ਪਾਕਿਸਤਾਨ
ਨਾ
ਉਹ ਫਿਰ ਮੈਂ ਸੁਬਹ ਤਿਆਰੀ ਜਿਹੜੀ ਕੀਤੀ ਤਿਆਰ ਹੈ ਪਾਕਿਸਤਾਨ ਨੂੰ ਫੋਨ ਆ ਗਿਆ ਮੈਂ ਕਿਹਾ ਜੀ ਹੁਣ ਕਰਨੇ ਕੋਈ ਬੰਦਾ ਆ ਜਾਵੇ ਤਾਂ ਕੁਛ ਹੈ ਜੀ
ਹਾਂ
ਲੱਗਣਾ
ਹਾਂ ਨਹੀਂ ਠੀਕ
ਤੇ ਚਲੋ ਛੁੱਟੀ ਕਰ ਮਾਰ
ਹਾਂ ਬੜਾ ਅਫਸੋਸ ਹੈ ਮਾਈ ਦਾ
ਬਾਅਦ ਦੀ ਉਮਰ ਵੀ ਬਾਬਾ ਸੀ ਜਾਂ ਬਾਬਾ 80 ਸਾਲ ਦਿਮਾਗ ਤੇ ਕੋਈ ਨਹੀਂ ਕੰਮ ਕਰਨਾ
ਅੱਛਾ
ਤੇ ਪਹਿਲਾਂ ਘਰ ਵਾਲਾ ਬਹੁਤ ਹੋ ਗਿਆ ਸੀ ਅੱਛਾ ਤੁਹਾਨੂੰ ਤਾਂ ਕਿਹਾ ਨਾ ਲਾਟੋਪਾ
ਸੁਣੀ ਹੈ
ਹਾਂ ਬਿਲਕੁਲ ਬਲਦੇ ਉਹਨਾਂ ਉਹ ਇੱਥੇ ਨਾਲ ਕੋ ਪਿੰਡ ਹੈ ਜਿੱਥੇ ਨਾ ਉਹ ਖਿਜ਼ਰ ਮੌਲਾ
ਆਹੋ
ਉੱਥੇ ਨਾਲ ਕੋਈ ਸਵੇਰ 10 ਮਿੰਟ ਨਾਲ ਜੱਦੀ ਦਾ ਉਹ ਕੰਮ ਨੇ ਮੈਂ ਕਿਹਾ ਰਾਬਤਾ ਕਰਨਾ ਤੇ ਚਲੋ ਚੱਕਰ ਲਾਉਣਾ ਫਿਕਰ ਕੀਤੀ
ਹਾਂ ਨਹੀਂ ਠੀਕ ਆ ਇਹ ਜ਼ਰੂਰੀ ਹੈ ਦੁਨੀਆਦਾਰੀ ਰੱਖਣੇ ਵਾਸਤੇ ਆਂਦੇ ਜਬਰਾਨ
ਉਹਦੇ ਨਵੇਂ ਪਿਆ
ਯਾਰ ਕਿ ਭੜਕਾ ਪਿਆ ਸੀ ਵਿੱਚ ਇੱਕ ਕਾਲਾ ਜਿਹਾ
ਥੋੜੀ ਦੱਸਣਾ
ਪਹਿਲੇ ਉੱਤੇ ਥੱਲੇ ਨਹੀਂ ਦਬਾ
ਹਾਂ
ਜਿਹੜਾ ਖੁੱਲ ਜਾਂਦਾ
ਨਹੀਂ ਨਾ ਖੁੱਲੇ
ਖੁੱਲ ਜਾਂਦਾ ਸਾਡਾ ਖੁੱਲੇ ਹੈ ਜਿਹਦੇ 9 ਨੰਬਰ ਲਿਖੇ ਹੈ ਨਾ
ਹਾਂ
ਉਹ ਪੈਨ ਨਾਲ 9 ਨੰਬਰ ਲਿਖਿਆ ਸੀ ਉਹਦੇ ਵਿੱਚ ਇਸ ਸਾਈਡ ਤੇ ਜਿਹੜਾ ਉਸ ਸਾਈਡ ਤੇ ਦਰਵਾਜ਼ੇ ਵਾਲੀ ਸਾਈਡ
ਚੱਲ ਜਾ ਫਟਾਫਟ